Hello again, traders. Doing trade once again from DRFX, Swing Trading Mentoring. Going to be taking a quick look at the situation on the pound Swiss franc, which has been in a strong downtrend for most of this year, but which over the last several days has actually pulled back to the major downtrend line. So I'm going to be taking a look at both the bullish and the bearish scenarios that could unfold for this currency pair over the next several days, now that the market has actually pulled back to this major crossroads area. Now, taking a look at the situation on the daily chart, you can see that the market has been in a strong downtrend for most of this year, which has allowed us to draw this strong downtrend line. However, most recently, you can see that the market has actually pulled back sharply and has now taken us back to the downtrend line. Now, every time a market has pulled back to a trend line, we always have to take into consideration both the possibility of the market resuming the existing trend direction, as well as the possibility of the start of a trend change. Now, taking a look at a closer look at the current situation, you can see where the market has closed above the downtrend line with this bullish engulfing candlestick formation, following the pullback that has taken place over the last several days. Now, there are many persons who would believe or who would actually start to own long positions simply because the market has closed above the downtrend line. However, because the market still has a chance of resuming the downtrend, and it has, across the market over the years, I have seen where the market does resume its trend direction even after closing above a trend line. So because of that possibility, the greater or the better assumption, the more conservative assumption, is to assume that the market is going to resume this trend direction. However, since the market has been rallying and that we have seen a close above this trend line, we're also going to be taking into consideration the possibility that this could be the start of an uptrend. Now, from the theory of trends and trend lines, basically what it states, and basically what I've observed over the years, is that once the trend line is holding, and even if the market has pulled back and closed above the trend line, if the break of this trend line is not significant enough, then the market still has a significant chance of resuming the existing trend direction. So the market can pull back and then U-turn to resume the trend direction without hitting the trend line. It can also do so after hitting the trend line, and it can also do it after it has broken briefly above the trend line. So all three scenarios are possible ways in which the market could actually resume the trend direction. Nevertheless, we're going to be taking into consideration the possibility that the market can still continue the current bullish momentum and actually start an uptrend. Now, if we're going to be assuming that the market is going to be continuing the bearish movement, we simply need to look out for bearish signals that take us back below the downtrend line and take out this bullish candlestick formation. However, that would not be enough. The market would then have to break this counter trend line, which would confirm the continuation of the movement bearish. Because as long as it is above this counter trend line, the market, technically speaking, is still bullish, and so it would still have a significant enough of a chance of starting an uptrend. So for the bearish scenario to be confirmed, we would need to first of all see the market pull back and then break comfortably below this counter trend line. Now, in terms of the bullish scenario, as I said before, this is not enough of a condition to actually start trading bullish. What we would need is for the market to rally more significantly and then pull back. It could either rally at this area here, up to this area here, and then pull back to test the trend line, which is something that is very common when it comes to trend changes. Or it can do so after rallying as high as this area and then pulling back only towards this area here without actually hitting the trend line, and then U-turning to provide us with a second signal to confirm the start of this new trend direction. So whether the pullback takes place here or here, what needs to happen is that the market needs to rally a little higher than where it is now, pull back, and then provide us with another signal to confirm the start of the new trend direction. So if we're going to be assuming the market is going to be continuing the movement bearish, then the signals on the right hand side will be the ones that we're going to be looking out for to confirm the continuation of this downtrend. Double tops, evening stars, bearish ABC signals, as well as bearish engulfing candlestick formations. Now, if the market is going to be continuing the or resuming or actually starting an uptrend, then the same situation applies in terms of the signals that we will be trading. So if the market is going to be starting an uptrend, then we're going to be looking out for U-turns that indicate the continuation of the movement bullish. And once the trend has started and it has allowed us to draw a trend line across the lows of support, then we would continue to trade this bullish so long as this trend line is still holding. So in that situation, we're going to be looking out for bullish signals, bullish ABC signals, morning stars, as well as bullish engulfing candlestick formations. You would not expect to see double bottoms, because double bottoms tend to present themselves at the initial stages of the start of a trend. So since the current bullish movement has already started, you would not actually see you would not expect to see a double bottom formation as part of the new trend direction. The ones that you would expect to see will be the ones that continue the trend, which would generally be bullish ABC signals, morning stars, and the bullish engulfing candlestick formations. So that's it in terms of the situation on the pound Swiss franc, where even though the market has broken and closed above the downtrend line, there is still a greater chance of the market resuming the current direction than actually starting a trend change. So attempting to open long positions would be too risky because of the possibility that of the market still resuming the existing trend direction, even though the trend line has been broken. So we're going to be looking out for confirmation in either direction, bullish or bearish. And then once the signals are strong enough in either direction, then we're going to be looking out for possibilities by trading either bullish or bearish signals. So as usual, if you have any questions, you can let me know by emailing me. Of course, you can check out my website, swingtradingmentoring.com, as well as my Instagram page at drfxtradingboss, where you'll find a full description of the trading methodology that I use, as well as a description of the trading manual, the trading signals, and the daily video lessons that I provide as part of my mentoring service. So until next time, traders, happy trading and all the best.